Hey, welcome to the Real Estate and Wealth Show. Christian DeLeon here. Glad to have you here.
I'm Allison Lozano, and in this episode, we're going to talk about the end of the housing market at the second half of 22 and how that has shifted our businesses and just a lot of great things.
Kevin Tooley will be talking about all things real estate and wealth, right? The state of the housing market, mindset shift for real estate agents, investors, and moving forward, what we have to do not only to survive in this market, but thrive.
What are we talking about today?
It's 2023. First off, we want to recap what happened in 22 with our real estate business, flipping, wholesale, investing, trading. We can start. You want to start, Allison?
Yes. When I hit around the summer of 22 and the rates started to go through the roof, all my sales just slowed right down. The speed with which I was able to get rid of stuff just disappeared, and I had a lot of flips that I had bought before the market crashed. Well, market didn't crash. Can we edit that out? Before the market shifted, I had things that I had bought, so I was a little scared that I was going to be stuck and I was going to be in a big losing situation. So I just had to really go back to the drawing board and think about price and think about loss and thinking about break even being my best case scenario. And I've been fortunate. I ended up getting rid of some of them, and I have a few more. But I have things that have sat on the market for a couple months that wasn't the case before. So it's really, but looking at it now, I think it's really just been a return back to a normal market, not a crazy market. And so I had been fully adjusted for a crazy market. You can buy all kinds of stuff, get rid of it quick, and that's just not the case anymore. So the time that I had, just to really think about everything made me reevaluate what I've been doing in my business, what changes do I need to make. So ultimately good, in the last quarter though, kind of scary.
Yeah, I totally agree. The with the raise in interest rates, definitely the refi market has completely dried out.
Disappeared.
I mean, every now and then you might get one or two for people that have purchased a home with a higher rate, maybe like a private money loan in which the seller didn't, when they initially purchased, didn't want to fix certain things like a swimming pool, and they had no choice but to go private money. So now the good thing about these, depending on where they bought and how they bought, I had a client that paid $1.4 million, and at the time of refinancing her home and fixing the pool, it came in appraised at $2.1 million.
Nice.
So she got a pretty sweet deal, sweet cushion on it. She was able to do a refi rate and term. Not the 4%, not the 3% interest rates, and this is a buy down program for first-time home buyers. But I know for a fact, rates are roughly between 6, maybe 5 3/4 up to 7%, depending on the actual program, the FICO scores, the debt to income ratios, the kind of debt that these people have, and the kind of way that they report their taxes. Some self-employed borrowers don't want to pay Uncle Sam any money. They just want to try to leverage their savings. And there's programs out there that they can still get on $2-3 million home with a bank statement program, a profit and loss statement program. Yeah, rates are going to be 7.5%, 8%, but the catch now and the difference between a market 6 months ago to where it's at in 2023 is you can go in there and negotiate some really good concessions from the seller. Selling the property, like closing costs, and even repairs, more repairs, and just a lot more flexibility for buyers to go in there and say, hey, let me take the higher rate, get a lot of incentives, and then when the market turns around and they start reducing rates, which I think now we're expecting some small a correction where it's improved a lot for buyers, they can take advantage of refinancing down the line, especially the FHA buyers that are buying now. These people, the minute they have a 0.5 tangibility improvement on their interest rate, guess what they're going to do? They're going to streamline.
Yep.
Right. They're going to streamline. So that's kind of what my take is right now on the mortgage side of it.
Being on the seller side of it, I've had to give those credits and kind of do more repairs. I've had to take offers that I wouldn't have taken in the past, and I think that's just kind of how it goes, which is great for buyers. But, I just gave a big credit for a 2-1 buy down. There's lots of flexibility for buyers, and I think it's really just a great time for people to buy. And, people pay a lot of attention to the news, which is all about fear and not really about a ton of facts. But it's actually a great time to use all the products that are out there to be able to get a great deal. And when the market shifts again and rates may reduce a little bit, go ahead and do a refi. But it's just a great time, because if you think about it, somebody that bought a house in the height of the market, and they're bidding $200,000 over asking and all this craziness happens, but they're at, a lower interest rate, great. But now you can get that same house and knock a good amount of money off of it, pay a little more interest, and wait for the interest rate to go down. But it's just really time to get out there and try, be able to be selective, ask for things from sellers. So it's not all bad. It's a great time for buyers.
Yeah, notice that as an investor, you have to be able to price a home where your home is not the most expensive home in the market.
Oh, yeah.
Like your home is going to sit, those days of trying to get the highest, you're going to be sitting in the market for 6 months to a year. You're going to get frustrated. As a seller, you better come to terms with your emotions, your mindset, and say, hey, I got to list this property at a certain price range where it's inequivalent to the rest, and let the buyers drive the sales price higher. Because if a property compared to the ones that are out there, you have the same price point, maybe give or take $15,000, $20,000, but yours is a completely rehab home, guess what home is going to sell at a real good price?
Absolutely.
That particular home, because the work, the product that you do here, Allison, is amazing. The finish, the furniture.
Yeah.
This is the stuff that people want to see. It's turnkey, right? So you just can't over leverage, and you can't be a stubborn seller, straight up.
I think as an investor, you have to see what's happening and buy accordingly. Like I think another mindset shift for me has been that I can't just buy, anything. I have to really, for me, I'm going to stick to the very traditional, very desirable to a first-time home buyer, a lower price point, those types of things that are going to have a lot more entry for people. And then buy those. I can't get the crazy things with the tiny kitchen anymore that people would have overlooked a couple of years ago. You really have to try to stay as normal and desirable as you can in terms of the entry point of the houses that you buy. And so I've totally shifted at what I buy, what I'll look at. I can look at a property right away and go, nope. Or yes, I definitely want that. And even still, those ones that are very normal and desirable to purchase for an investor right now, those are going pretty quick. So you just have to really be smart about what you're buying, what's going to be the end game. If I have to drop my price, is there still a profit here? Right. All those types of things. You really have to think about that stuff. And I've really shifted how I buy, for sure.
Yeah, the first-time home market buyer, the price range is very important. Between, if you buy a property for $350,000, you put, let's say, 40 grand in repairs, $390, turn around and list it for 500 grand, $499. We're talking a couple weeks after that, you make a nice, decent margin. You multiply that by 10 properties. Think about the amount of income you can generate in this market.
Like you said, when I'm doing something, if there's, buyers have a lot more choice now. So they're not going to want the fixers anymore. They're going to want to go in. So that's why I thought, okay, I need something that is clean, that is just move-in ready, those types of things, and really just pay attention. I always have, but just pay more attention to details. Someone at a lower price point to maybe put some more bells and whistles than I wouldn't have before, because I knew it was just going to fly off the shelf. Now I really want to make it nice. So my home, if there's 10 homes, mine is the nicest, newest, most desirable. I have a greater shot at getting it sold. Then, like you said, lowering the price too. Just don't want to be at the top dollar. Just got to put it out there at a competitive price.
Right.
For sure.
So, obviously we know this market has shifted, right? And so you had to shift your business model a little bit.
Yep.
And I know a lot of your flips are more higher end, over $1 million. And in this market, in this game, you want to be able to get in, turn, and flip it right quickly, right? So at what price point do you see that happening, like the mid range between $400,000 and $700,000 or $800,000 and up?
that's what I'm looking for. But see, I don't want, and everyone over time, I've learned what I'm not going to buy, what works for my business. I don't buy stuff on main roads, like a main street anymore. I stay away from condos and townhouses unless it's an absolute slam dunk. There's just so much more variable HOAs and, getting things fixed and all that stuff. I just stay away from that. So I'm really looking for a very traditional, minimum of 3-bedroom, but 4 is more desirable, even down, to more details of, and definitely I don't buy stuff that's 1 bathroom anymore. It's got to have 2, or it's got to have room to put a 2. So I think in that 400 to 700, price point, and as ideal as I can is the perfect buy for me. So it's really paying much more attention to the details of the product that I'm going to be putting out there, make it really nice, and get it gone.
You know what's to kind of add to what Allison mentioned, as an investor, when you buy a property, just because let's say your offer gets accepted and you actually agree to a sales price, sellers, they don't want to start anything all over again. So when as a buyer, you want to take advantage of all your inspections, right? That way you can still go back and negotiate with the seller.
Yep.
And that way you can pick up a good deal at a good price point, so that you can add extra bells and whistles on the property with the savings that you save from the seller. Right.
Yep.
Because as investors, we like to close deals really fast.
Yes.
And the sellers want to close fast, especially if the property comes out of a probate, or it's a distressed seller, or they have a second loan on their current property that's in foreclosure. A lot of people ignore those second loans, and they never made payments on them. And now it's kind of coming back and biting them in the ass, because what they should have done back then was negotiate at a lower amount, like pennies on a dollar, and get that second loan into a reconveyance loan. Right.
Yeah.
They were popular when the Obama Debt Act was in place, when you were able to get a reconveyance, and if you had $150,000 second, you threw it into the taxes. You didn't have to pay taxes on it.
Yeah.
Now it's gone.
Yep.
That's gone. So take advantage of any little window of opportunity that you have to negotiate even a nice amount of money from the seller, so that you can, on the up leg, invest a little bit more in the property.
You just gave me some, good advice when I just bought a cabin, and I'm kind of venturing into this time into different markets, things that I haven't done before. I want to buy a lot of rentals this year, passive income stuff, cash flowing stuff, cabins, Airbnb, like just things that I hadn't thought about before, because I was so focused on the flipping. And now I just kind of want to do it all, because I think another lesson I learned from the end of last year was, do not have all your eggs in one basket. Don't be just waiting to flip or waiting, to sell, because when things shift, you need to have other things in place. I had cash, thankfully, that got me through times when it was taking a lot longer to sell, but it made me really reevaluate and look for what I want. But I was able to pick up that cabin with a lot of equity in it, because it was a probate situation. They wanted to get rid of it. And you taught me after, which not early enough, but to ask, for that credit. So at the end of the day, $0 in the deal to be able to buy something with a ton of equity. And I leveraged a credit line that I had. So there's still opportunity. It's just tuning your eye to look for the deals.
Yeah, those nuggets that you get from other people, from podcasts, events, seminars, you can apply those, and have no fear.
Yeah.
Like if the seller didn't want to cooperate with closing costs, knowing that you got a line of credit, so you got 0 down, right? You're trying to recoup as much cost as you can. On top of that, you might even get some credit for the rehab costs, and then you got probably $200,000 in adjusted rate value, right?
Yeah.
So then, okay, if the seller doesn't want to play ball, then work with the seller and say, okay, can you increase it another $15,000 to cover my closing costs? That way you go in there with 0 risk.
Zero risk.
Yep. Now that extra $15,000 reinvested back into the house, and maybe possibly add something beautiful in the property, you'll make back maybe 30, 40 grand on the upside. Yeah.
I think because we've been talking a lot about buyers, but I think on the side of the seller, like when I'm trying to buy something and I see a seller that's kind of been having something sit for a good while, I'm going to ask for that super low price. I'm going to ask for things. And I think that's why it's really important to have the right agent
Right.
that will go and ask those questions sincerely, not be like, oh, I'm going to offend them or whatever. I'm on both sides of it, right? I'm the seller and I'm the buyer. So the painful lessons that I sometimes learn on the seller's side, I'm going to turn around and incorporate that and make money on the buyer's side. Because I think one shift that I had from you guys was, just taking advantage of opportunities, with equity and being able to go for it and ask, like, I'm, going to look at out-of-state markets and just different things I've really been researching to make that cash flow that I really want. So you learn painful lessons and you turn them into something you can monetize, I think.
Yes, most definitely, most definitely. The market definitely has shifted for buyers.
For sure.
Bottom line, it has. If you're in a market, really, I would advise dial in on your loan program, your loan payment, but depending on how much you qualify, and work with your lender. That way, when you go and you're shopping for a home, look for homes, look at those homes, and if a home has been sitting on the market for 200-300 days, there's a lot of room for negotiation.
Oh, yeah.
So, but if there's a nice hot home that just hit the market and is priced not too far away from that particular home, but it's rehab, then, decide, okay, dude, this one makes more sense because I'll save $60,000, $75,000, $100,000 in repairs. So dial in on what your ultimate goal is, and then compromise with yourself. Work with your loan officer, work with your real estate agent. It's a great time.
I think also, though, don't assume that because a property's been on the market for 200 days, there's something horribly wrong.
Right.
You don't make assumptions about anything. You don't know what happened. You don't know if there was a reason. Like, still go look.
Right.
That's what I got my first cabin, I was like, wow, I like this neighborhood, great location. I'm gonna, learn from Kevin about the Airbnb system. I'm in process to get that all set up right now. And I thought, well, why not buy a couple more? Why not look for that equity? So I started looking, and I saw stuff that looked good online, but I got there and I was like, wow, this is horrible, But the opposite too, go look at stuff that you think may be horrible. Go look. It might be better in person, and then go make those offers and reach out to people. Like, just try and just move, just make offers and ask people, and don't worry. I mean, I'm not rude. I just say, look, this is what I'm willing to pay for it. And I understand if you don't want to take it, but here's where I'm at. I've had that happen several times where they come back to me way later. So you just got to ask. And, but I think, Kevin can talk about the market. I think with the market really shifting at the end of the second half of 22, the rates going through the roof really scared a lot of people.
Yeah, Allison, you're always asking me, being an investor and flipper, you're trying to gauge the market environment with, interest rates and buyer and seller demand, right?
Yeah.
So last year we talked about, like, interest rates are going to increase, and you kind of saw that coming, right? It was going to slow down, so you had to pivot and do a couple of things. In hindsight, right? Hindsight's always 50-50. Would you have done anything differently than you did?
Yeah, I think I was probably in the mindset, not that it was
and I'm
always
always telling you, don't over leverage, right? Don't over leverage.
You always tell me that, and I don't. I've learned my lessons, but I think, some of the things I wouldn't have probably bought that I did buy. Some projects I got stuck in, like that extended me from the market, because I was in a hurry to get rid of stuff because you kept saying it's going to change,
right.
But I got stuck in a lawsuit on one that paused me from being able to sell it. I got stuck on a permit issue on another, things that I didn't foresee on a few, especially it was a lawsuit with the city over something not related to me. And there's no way. It's like the pandemic. No freaking way I would have seen that coming.
It's a black swan effect.
I didn't see that lawsuit coming. That kept me held back. And now, it's just really like learning. So I would have looked a little more closely, and I think probably stuck to the cookie cutter stuff and not really, bought these $1 million, dollar houses. That's not where it's at anymore. So, but there was some reasons I just couldn't get out of what I had gotten into. But I am grateful. It's weird how my perspective has shifted. I have not yet lost any money. So I was able to get out of all of them, make a few bucks, and I've just got 2 more that I'm stuck in, 3 more. and then I'm good.
One
Lesson
thing
learned.
about you is you always figure a way out.
I do. I rack
You're
my
not
brain.
stuck. Nobody's ever stuck.
I'm not stuck.
There's always a solution to a problem.
You tell me that there's always a solution. Might not be one you totally love,
Right.
but there is a solution.
There's always a
to get out of
solution.
stuff. I think that's something I got really good at too, or maybe just a skill set that I have, period, is I know when to cut my losses.
Right.
Like I hear people, just sellers or agents talking about silly things like, well, I'm not lowering that 10 grand or that 15 grand. It's like, bro, cut your losses.
Better lose 15 than 150. Right?
And people don't think about holding costs or how much it, like this house cost me.
Opportunity cost.
Opportunity cost. Yeah, this house cost me a couple $100. The one we're sitting in cost me a couple $100 a day to hold. So am I willing to go down on my price? Yeah, I'm willing to negotiate. I can't lose, so I'm not willing to go there quite yet.
Yeah.
But I have to think about that, right? What does it cost me every day to keep this and hold the line for what dollar amount? You really have to take a lot of those things into consideration when you're the seller. But letting go and cutting your losses, I think, is key in this business. But it also makes me excited for when I'm finally done with these last, few properties, which I think I'll, at a minimum, come out even on them and be able to walk away. What I'm going to buy in the future,
Right.
So much more opportunity out there and what I'm looking at. So,
and I think it's so important that you brought up that, letting go and getting rid of that detachment, right? Because if you have these projects that are sitting around, then it's mentally draining your capacity to go out and do other things, right?
Yep.
But if you, you might not make as much as you wanted, you might make a little bit less, right? Or you might incur some losses, but at least you can free your mind from that attachment and you can go on and do bigger and better things.
Yes, that's another thing I think I learned from you is just like letting go of that, so that because my mind was just, especially the last couple of months when the rates are just up, and I was like, oh my God,
It's the end of the world.
It's the end of the world. The sky is falling,
1,000%.
Okay, I've got money, I'm good, but still just that mental thing, that game's got to be strong. And I think that's another thing the second part of last year taught me was your mental game has to be really strong for whatever's happening.
Yeah, and it's with everything, it's with real estate, with investing, with trading, right? Like every morning I go through the same thing. Have losses in the morning. If I don't cut those losses and I just dwell on it, then drag it throughout the day, there might be other opportunities out there and I'm just still focusing on that loss and it's not going to allow me to pursue these other opportunities, right? So it's so important to cut those losses. What I'm doing here is on a faster time frame, right? I'm doing what you're doing in like minutes and seconds and hours, but with, investing in real estate, obviously it's a longer dragged out process. So we might not have to make those decisions quickly. It's like, cooking a frog, right? You turn up the heat slowly. You're not being cooked. Like, I'm good. But 5 months later, you're 150, 200,000 down the hole because it's just sitting and you're incurring these hard money costs, right? So, different mindset between when you're trading or investing, you can, exit your losses with a click of a mouse. You can't do that with real estate. So you have to put a little bit more thought into that.
Well, I think that's why I started shifting my thought about what I am doing. If I'm buying a flip, I'm going to buy something that I'm giving myself the best odds at getting rid of fairly quickly, right?
Absolutely.
I am not buying something that is going to be a much smaller buyer pool.
Right.
I'm going to buy things like that. But then I thought, you really have to think about securing, because flipping is cash, right? It's whatever. But other stuff, long-term rentals, things that you're going to hold that are going to bring you in that cash flow every month, or Airbnbs that you can really leverage and make that cash flow, or just other things, trading with you, just doing other things that are really learning a different set of skills.
And bringing in, additional multiple streams of income, so you don't feel like your back is against the corner.
Absolutely.
So you're doing wholesaling, you're doing flipping, you have your revenue from your short-term rentals coming in, right? So you're not going to feel pressure to make this happen. You're so attached. You're always checking your email for offers. Right?
I would definitely say that for me, because you guys have been in this space a lot longer than I have. I came from a teacher mindset, and that was definitely the biggest lesson that I've had to realize is once your mindset is adjusted, everything else will always follow. So if I'm having a hard time, I really need to look at what am I thinking? What are my daily thoughts?
Yep.
What am I doing? Am I feeling sorry for myself? You know,
Yeah.
and I think the other thing I've learned is to really focus much more on gratitude. Like even when I had stuff sitting on the market, I was like, we have a roof over it, just all the way back to basics, right? And get your mindset right, because that's a teacher mindset is a one-track mindset, right? It's a W-2 employee, but having to shift to being an investor and an entrepreneur. And now I've learned there's other levels of that, right? Okay, cool. I got out of my debt, all this stuff, fabulous. Now I have way bigger dreams, right? It's like I'm starting again, like I just scaled, Mount Everest, and now I'm scaling another one, mindset wise.
Yeah, and
I think
you're
key.
a perfect example of that.
Yeah.
I always share your story with everybody, you know, and that comes from a good place, right?
Yeah.
Like if Allison can do it, and if I can do it, like anybody can.
Yep.
And you've seen your breakthrough,
Yes.
it's because of mindset, and
Absolutely.
that mindset shift. So Allison, being an investor, the market shifted, and you got to be more selective with your properties and the upgrades and the different things you put in the house. And every one of your flips that I've been through, they're all beautiful, right? All the upgrades, the bells and whistles, there's nothing for me to do. It's perfect. Right?
Yeah.
And so with this market, have you, kind of gave that a second thought where, if instead of putting these upgraded tiles or these hardware, right, maybe just put basic things so that the buyer can come in and finish it off to their liking, and you save some money, and and the pricing is lower for them.
That is definitely a discussion me and my husband have all the time, talking about shifting, to a lesser price point on the stuff that we're using in the property, and also looking at stuff and saying, can we actually use that over again? Do I have to come in and rip everything out and whatever? Is there something that is salvageable here? Being a little more conscious about, hey, I could use these cabinets, somewhere else, or I could, So just really paying more attention, definitely. But finishing, I've always honestly tried to be pretty frugal on looking at stuff. I have a project manager who's very frugal, and people look at flooring or things and assume I spend a ton of money. I usually didn't. So I feel like instead of really shifting out those things, just obviously paying attention to my bottom line and my budget.
Right.
But people don't realize you can make stuff look really nice for a couple bucks, right? Like furniture, you can get it and refinish it and put it in, or dressers or things, sand it, paint it, good, put some new knobs on it from Amazon for $1 or $2. So it's really more getting creative, I think, versus just taking things out. But yeah, I've definitely had to reevaluate.
Being creative and resourceful, right?
I'm very resourceful. I always have been. So I definitely just have to shift that into what I'm doing now.
Nice.
Yeah.
Resourcefulness, man, that's a key word right now.
Yes.
You can over leverage. As a real estate agent, I know a lot of real estate agents that might be, that were challenged in 2022. Their sales dropped.
Yep.
I mean, a lot of things just kind of hit a wall, but then, it's just a process that we had to shift and understand and adapt to. And what my thing is, what makes a person successful? Why are people successful? By the amount of problems that you solve.
Yep.
And when you're stuck in process, that's the beauty of our business and being an entrepreneur, is that you tend to understand, you make certain shifts, certain corrections, certain adjustments, decision points on, hey, I'm going to cut my losses right now.
Yep.
I just move on, get it out the books, move on with the next deal. Look for other opportunities that are going to offset your losses down the line.
Yes.
They're all short-term anyway. So short-term losses, long-term gains. And that perspective, that intuition that you learn from encountering that challenge or during the process, it's just a valuable lesson that will catapult our mindset, will control our emotions, and just put everything in a very sound tranquility perspective. Because if you're being too choppy, and you're gonna end up making decisions when you're emotionally off balance, and the reason people lose their emotions is because their mindset is controlling everything. They got to think of things, they got to listen to their heart versus their mind. And if two are not connected together, then they're going to be all over the place. They're going to be self-sabotaging themselves,
Yep.
whether it be a trader, an investor, a lender, an entrepreneur, or even a loan officer. It just ties in all together. I think in any nature of business.
Right.
I think with other entrepreneurs, I think there's a large group of people that just kind of dropped out when the market shifted in the second half of this year. I have people saying, "Are you still buying stuff?" Yes, I'm just buying the right stuff. I'm buying different stuff. I'm buying stuff I know I'm not going to lose, because there's still plenty of people to buy houses, right? Even though the buyer's pool has shifted a little bit, people got scared, you're sitting a little longer on market, house is going to sell. And when I start to get worried about something, I think, you're not going to be holding this house in 10 years. Someone is going to come and buy it, relax, think about something else, and just kind of talking myself through that. But I think for me too, the other thing has been the process of learning to listen to my own voice. And there's so much out there that you could do when you're an entrepreneur. You just see opportunity everywhere. But I've learned to listen to my own gut and my own voice. I don't look to anybody for, a second opinion or a high five. If I feel like it's the right thing to do, I'm going to do it. And so I think drowning out all the noise and just picking a project, staying focused, getting it done, get it across the finish line, get it sold when it's taken a little longer, move on to other stuff. But definitely listening to what I know how to do. I don't compare myself to anybody else whatsoever. I'm happy for people, but I've got to figure out my own stuff, so I'm not going to compare myself to anybody. But I think as an entrepreneur, I just see more opportunity in the downturn. Got to get rid of stuff I should have gotten rid of. But man, there's just nothing but opportunity out there now. You just got to do a little more work, get creative, and go find it. So.
A couple questions I had for you guys is, you guys are both successful entrepreneurs, flippers, and coming from the investor side, can you share with our audience and about the sales side as far as listing agent and buyer's agent, because we know the market has changed a lot and the activity has slowed down a lot, and there's statistics out there like 30 or 40% of real estate agents are just going to either quit the business or go do something else, right?
Yeah.
So what can they do right now to position themselves to be, still keep themselves busy or partner with the right people, start, honing in their skill sets, so when the market picks back up again, then they can start, bringing that money in again.
You first.
Do you want me to go first?
Yeah.
I think there's a lot of intellectual factors that play a role in a person's perception and sales. Obviously, we just got over the holidays, and just the holidays. What happens? A lot of people tend to get caught up celebrating. They overdrink, they overconsume, and they eat more than what they should. They fall off track. Now that we're in the new year, I noticed that, we did an open house on one of my flips this past weekend. First weekend listed, and we had a total of 51 walk-ins.
Amazing.
Families with a mixture of agents, neighbors,
Buyers are still out there.
Yeah, and within the first 4 days, I got a full asking offer.
Nice.
Awesome.
And there's buyers out there, there's investors out there, there's opportunity out there, and there's a lot of agents that are hungry. The ones that are left behind, they want to host open houses. They want to go in there and do a quick TikTok on your house, put it on their social media, and build some kind of traction and use that as leverage to generate leads. At the end of the day, we get paid to generate leads. And the difference between us as investors and regular real estate agents are hustling. They're on that hamster wheel working buyers. We as investors, we can just kind of put the product, we're principal. We put a good product out there, it's going to sell if it's priced right. That's my thought process on that.
I think on the real estate agent side, I saw the same thing. A good amount of people coming through open houses again. Holidays are over. I think people are waiting to see what happens this year, how it's going to adjust. But I definitely see a change. For me, I see that buyers understand now they can take a little longer and they can shop around. They don't have to pick the first thing. So maybe a little, that kind of buys into the little longer waiting period. And also my price point is high on what I do have. So that's another factor. But I started thinking, what am I doing to get creative with getting sales? Because I don't understand people saying, oh, there's just nothing. Yes, there is. Where are people looking? Like Kevin's, big on AI now and telling me to look at other stuff. And I'm like, all right, I'm gonna try that. But I just started looking also at basic stuff. So like I told you, I'm looking at local neighborhood apps to put things on, things that I wouldn't have done before, and looking at the price of advertising so I can be out in front of a huge audience. Also just staying consistent on social media. I get so many messages about people, like little things that I'm doing and whatever, and people really follow your story. I just think, this is boring, or this is just normal stuff. And people really get excited about, like when I posted my cabin, so much reaction, like, oh my gosh, I want to go. That's so cool. It's great.
When are you invited?
Yeah, no, you guys can go free. No, I'm kidding. So I think that really looking and reevaluating your real estate agent game. What are you doing? How are you getting those leads, and are you willing to put in the work?
So what is the real estate agent game, right?
Getting leads, obviously.
So getting leads. So you got to get leads. You got to have a way to generate leads, right? And you have to be able to nurture those leads.
Yes.
And you have to be able to convert those leads.
Yes.
And monetize off of it, right? So a lot of agents, they're stuck in the generating leads part, but they don't know how to convert them. They don't know how to build the relationship with the client, because that's what real estate is about, right? Building the relationship and then overcoming objection handling and all that stuff, which most real estate agents don't know how to do.
So I think that's an awesome thing about EXP is that I, for the first time, and I've had, this is my 10th year since I got licensed, will be 10 years. And I'm finally using a database. Like everyone always tells you, and I'm like, yeah, okay, I did never do it. I put all my stuff into KV Core. Wow, that thing does so much stuff. That thing comes for free with my EXP membership. And then you can advertise your properties from that thing. And there's just so much, there's so many classes. Like another cool thing I did with EXP is I've gotten certified in REOs, relocation companies, Affinity. I finished all my certifications free with EXP. But another cool thing I'm doing to be able to connect with people is I'm going next week to an EXP event that they're putting on. Nothing ever cost me money other than my $85, monthly fee. I'm going to meet with Chase Asset Managers next week. They're putting on an event. I'm because they take people's stats, people that are high performers. And I got invited to attend an event with a bunch of bank asset managers. They set that up. I get to go meet these people. I've never been in this game. I've never been in the REO game. But I get it. I know what it is. I know that the bank's got timelines and all these things. So you make these relationships with asset managers. And I thought, what other real estate company is doing that for people? Is going to set up a free meet and greet with the people that you need to talk to directly to start being able to bring that in as a separate income, so much opportunity in the company to take advantage of.
That's the same reason I decided to join.
Yeah.
Because running 6 different types of businesses and having employees for over 20 years, I've learned to scale, leverage and scale. Then I realized that, hey, what other company out there is allowing for you to become a shareholder?
Yep.
Every closing that I get, there's shares that are being allocated for my future retirement. So if I give it and we pound a lot of production and we introduce the opportunity to others so that they can also leverage, build a team, be an influencer, impact people's lives in a positive way.
Yep.
Like, to me, that brings fulfillment. If you're not impacting lives, that's why I have an organization with almost 100 salespeople that are under my mentorship. And I'm constantly having masterminds throughout the day with him. I don't get so caught up in the rat race of chasing deals anymore, but because I've been doing it for such a long time, clients are just reaching out to me. They're reaching out to me. And how am I not going to fulfill their need if this is what I'm passionate about? And then you're making revenue as you go along, but you're also building your future retirement.
I think the thing for me too with EXP is that as an investor, I learned the very hard way, about 8 years ago, liability, right? When you're buying a property, when you're selling a property, when you're fixing it with your workers, like protecting yourself. I have been threatened with lawsuits and had lawsuits filed more times than I can think from opportunists, from, people that were not on the up and up. And I, knock on wood, I haven't had to any downside to those, but going through that process, you realize like, holy cow, you really have to protect yourself from liability on your properties. I never wanted to be a broker. I didn't understand that up front. I thought that this is the next step, right? You're an agent, then you become a broker. And then I thought, absolutely not. Why would I want to hold the liability for other people? I'm already got enough liability from the other things that I'm doing.
Yeah.
But with EXP, you can take your little brokerage, your thing that you've built, you can still use your own branding, your own team, and all of that stuff, and have your own office, but none of the liability, which is like, who wouldn't do that?
Yeah.
Like,
The software is already in
yeah,
the system.
everything's there. Yep.
You leverage the
slips in there.
benefits of being a broker with the
Absolutely.
revenue share, because as an agent, you can't,
Yeah,
you can't
you're not gonna
recruit-
get that.
You can't recruit other agents and, get overrides off of them.
Yep.
Right?
Nope.
You have to be a broker or own part of the company, but with EXP, that's a great
you
deal.
basically get paid. You pay for what you get. You get
Yep.
what you pay for, right? If you
Absolutely.
want to go to a 100% commission shop, and
Right.
they're not 100% commission shop. They're going to make some money.
Nope.
Brokers are brokers. They're there to make money.
No one works for
They're going to
free.
charge you a transaction fee, an E&O fee, a flat fee, or
Yep.
just some other fees
look
where
at
you're
your
going to
deal
end up
fee.
being you're going to
Yep.
end up being at maybe 80, 75%.
Absolutely.
But then again, you probably don't have the support.
You don't
have
have
the
the support.
technology.
Yeah.
You don't have the templates.
Right.
You don't have the KV core. You don't have the opportunity to bring other agents
network,
under
right.
The
your
network.
network. Like if you introduce an agent to your broker, he's gonna be like, "Oh, thank you very much for that agent," but you're not gonna get any incentives out of it. You're not gonna make revenue share. You're not gonna get stock options. So, really come to terms with what your
Right.
your ultimate goal is, and
Yep.
and get your needs met at bottom line, because nobody
Absolutely.
else is going to do it for you. There's only so much influence a person can do for you.
Yep.
But you also have to come to terms like, hey, I give up a little bit, but I gain a lot in the future.
It's the idea
Yeah.
of cost versus value, right?
Yes.
If you're a consumer, most consumers are always looking at the costs, right? They're
Yep.
not looking at the value part.
Mm-hmm.
Yeah, I mean, if you're shopping for socks, yeah, whatever. Socks are socks, costs. And I want dollar socks, right? But I mean, if you're Christian, you go Versace socks. But cost versus value.
Yep.
If you're going to go into business with somebody, you got to, what's the value and what's the cost,
Yep.
right? If you're just looking at costs, how much am I saving? How much am I saving? And you're sacrificing the value.
Yeah, I see that so much. Like with this house, for example, since I had to rebuild everything, it's all permitted. I got the electric and the plumbing is 100% new. The HVAC's 100% new. The water heaters, everything, all the major systems of the house are
Right.
brand new, pretty much. If you're thinking about cost versus value and you have something that's similar to this product,
Right.
which I haven't seen any, but if you have something similar, I want my house, right? Because you're getting way more long-term value
Absolutely.
in my house over the next 10, 15, 20
Right,
years.
right.
But people don't look at things like that.
Less
And
headaches, right?
You just gave me a shift, a mind shift
What?
right now.
Yay.
For any real estate agent that's working with an active buyer and they're going to go preview a home or show their clients, why don't you take 5-10 minutes and talk to the listing agent or
Yeah.
the investor?
Right.
Get well
The picture.
informed on what the inside of the house has, so
The
that when
guts,
you go
right.
take
Yeah.
your clients to the property, you're able to kind of itemize and pinpoint stuff
Right.
that they don't see.
Yep.
So that they can see, wow, what a big benefit this is. And it makes your life easier, right?
Absolutely.
Research.
Yeah.
spend the time to look at that. Like agents call me with all kinds of silly questions. I'm like, man, because I put so much in the listing, people don't read it.
Right.
They just look at the address, and if that was me, I'd be
Yeah.
like, hey, do you guys know
Yeah,
that there's a new blah blah blah
Right.
here?
If you're the investor or the listing agent, you've put all these upgrades inside the guts of the house.
Yep.
And you're not, marketing and exploiting
Yes.
that to the best of your ability. then shame on you, right?
Yes.
But if you have already, like you put it out, you put in all the description,
Yep.
and the buyer's agent, they just come show the house. They don't,
Yeah.
they don't detail out all these things that the investor and the listing agent has specified in there, then you're doing your buyer a disservice. Right?
Absolutely. So I think it's just key to be, but I think, my idea of a good realtor has also shifted too, as the market shifted, really trying to find the best loan products for your buyers and
Right.
the best homes that have the most long-term value for them is really key. And I think a lot of agents can really up their game, which is why, again, EXP is awesome because there's nothing but free learning there.
Right.
You can go to EXP University, take classes, get certifications, learn from other people. It's there every day.
Right.
Network with people, go to their events. I mean, there's just an infinite amount to learn in this company.
There's definitely not a lack of leadership.
Yeah.
I think that the only problem is that people need to look at themselves.
Absolutely.
Because there's a lack of execution in them.
Yep.
Yeah.
And that's part of, like I mentioned earlier, it's a psychology and a self-sabotage that they have to overcome.
Yep.
And that's more of a self-improvement thing. If you're not out there working on your skills, working on your mindset, your perspective, your health,
Yep.
how are you, all that ties in to being decisive, to making a sound decision,
Yep.
to executing, prospecting, generating leads, creating opportunity. There's a lot of things that play with you being active. If you're not active, you're going to be reactive. And what happens when you're
Yes.
reactive?
You lose
Right.
when you're reactive.
Yeah, I mean,
Yep.
the information is out there. There's information abundance or overload, right? But
Absolutely.
it always comes back to your choice. The choice is always yours, whether you want to self-improve, whether you want to go out there and seek new information, right? You always got to seek new information, because if you're always stuck on the same information, you're going to keep on doing the same thing over and over, even if it's not working, right?
Yep.
And if you're not out there networking, talking to people that are doing things and things that are actually working and
Yep.
monetizing off of that, you're going to
Yep.
be stuck in your hamster wheel.
Yeah, exactly. So, you guys, we have a special announcement. We are creating a webinar. So we're going to talk about, Kevin's going to talk about option trading, spreads, calls, puts. I'm going to talk about mortgage lending, investing, escrow, real estate. Allison's also going to talk about what she does. There's going to be so much content in this webinar, and obviously it's going to come with a monthly fee. We're going to give you guys some initial stuff in the beginning where it won't be a charge, but we're going to give you guys information and bring a lot of value to you guys so that you guys can also improve your lives, for you, your kids, your family. You might be that one, the first millionaire in your family.
Yep.
I was.
Yep.
I became a multimillionaire because I took risk. I believed in myself, but I needed awareness. I needed perspective from other people to show me that it is possible. It is possible. So we're bringing that to you guys, right?
Absolutely.
100%. Yeah. So we have, we've been around the block, right? It's
Yep.
not our first rodeo. We've been through the ups and downs, .com boom, housing bust, right? Yep. COVID boom, COVID
Yep.
bust. So we have a wealth of knowledge and experience, and we'd like to share that with you guys. So you guys don't have to go out there and reinvent the wheel, right? Learn from us, learn from our successes, and also our mistakes too, right? Because that's the best way to learn, is from other people's mistakes, not just your own, right? Have somebody else go make the mistakes and you learn from theirs.
Yeah, we've become professional failures,
Yeah, there you go.
but we don't stop. We just keep
Nope.
learning. That's the key. It's just like you don't quit on yourself. It's no reward in that. It's more regret. It's more painful when you quit.
Yeah. So, I mean, to me, they're not failures. They're just lessons.
Yeah.
Right?
Yeah.
You just gotta look at them as lessons. Like, okay, this is an expensive lesson. So
Yep.
it's such an expensive lesson that I don't want to repeat that expensive lesson. So I'm going to correct that behavior, or that mindset, or whatever it is.
Yep.
So it's not repeated over and over and over again, right?
Thank you guys so much for watching our episode. Stay tuned. We have future upcoming episodes. In the meantime, follow me at The Mom That Flips.
You can follow me at Kevin Tooley.
And you can follow me at Live to Inspire, Christian DeLeon.